An early good morning to all of you out there. And so far on the poll that I ran over here, we have 45% of you who do believe that this is a double bottom and 55% of you who say, no, it's not a double bottom quite yet. So we're going to get right into it. We're going to have a whole look at a different bunch of data. And first and foremost, I'm going to repeat one or two things based off of yesterday's show because it was on the Crypto Shorts channel. So I know a lot of you missed it. And that is the logarithmic regression curve over here, which we have now spent the most amount of time ever outside of the lower bands, which is 14 weeks. That's 3.5 months, which is not a good sign for the long term. But I did tell you guys to mark out this all-important $19,535 level. And you can see we have lost that level, which would imply most likely continuation to the downside, despite the little bounce that we're currently having over here. So keep that in mind, be cognizant of that, and mark out your main support areas. And if you call a spade, where is that going to be? Of course, it's going to be lying over here between the $10,000 to $12,000 region. So we have on the lower time frames more clear levels that are validated that we can look at, and I'll bring those up shortly. Weekly, I wanted to quickly touch base on this, and that is if you have a look at where the lower Bollinger Band is coming in, it's right there at that key yearly level on the weekly chart, which is at 13,880. So I find that a very interesting space or place, at least for the Bitcoin price. Ethereum has a similar level that's also in play over here on the weekly, and its yearly level is at $728. But since this one's moved a little bit more aggressively to the upside, you can see the Bollinger Band is tracking right now at about $800, and that will be rising as each passing week goes by. So I'm keeping an eye on those for the long term as potential low targets, assuming that we do capitulate. Those would be the buy the dip zones that I'm most interested in for Ethereum and Bitcoin on the weekly chart. And what we want is we'd want for this to play out sooner rather than later, because the worst thing that can happen is that the purple 200 MA and the 255 MA, which is the orange, start to curl back over. That would be a very bad sign. And what you'd find is the institutional investors might not be interested, because these are the sort of metrics that they look at for long-term health of a particular market. So moving on, we have our inverted chart over here, which is the line chart. Yesterday, we were breaking out of this to the upside, as you can see over there, which would, of course, be a bad thing. And now we've recently just started to come back down. So bulls are really holding on by an absolute thread over here. At the end of the day, this market will still remain bearish when you consider this chart. Even if this were to come all the way back down to about $20,500, on a closing basis, the price can close back above $20,000. And in my personal opinion, absolutely nothing would be changing from the bearish perspective. It would still be medium to long-term bearish until these levels are taken out. And then you need to, of course, make a new lower high over here, which, because the inverted chart, that would essentially be the same thing as a higher high. So keep that in mind. DXY, a lot of people are already calling for a top. They've mostly failed at this, so I wouldn't be focused too heavily on that. You can see when you have it on a 3-day chart, it is a clear uptrend, and pretty much as long as it's holding above this level over here, which is coming in at 105 points, that will continue to remain just another higher low. So if you see something like this, even if it breaks that trend line, that is yet another high low, and it's probably going to march on towards the upside. However, that 111 area is a key area, and I would expect, in a similar fashion to what you saw here, some sort of a major pullback from that zone. So if that can happen over the course of the next 2 to 3 weeks, that might give us the final flush down in crypto and give bulls a real chance at least confirming some sort of a local bottom and then bouncing price properly out of there. So looking at the NASDAQ's close yesterday, there was, of course, a little bit of a bounce off of those levels. Probably the same thing on the S&P 500, which is why, see, out of this key level over here, same thing on the S&P 500, which is why crypto managed to also push up slightly and bounce out of those zones. But with that being said, you do have to consider the overall trend of this market. It is still down, and I mentioned many times before, right? These things typically move in 3 main drives. So you have your first drive, second drive, and now you're waiting for the third drive to the downside to complete the pattern. And we haven't seen that yet, so there is still a bit of time to go. The VIX, or volatility index of the S&P 500, has pulled back, but it is still looking like it's got more upside, and it did break out of this wedge over here, which is what gave us the volatility. But I don't think the volatility is over. There is still more to come, and you can see this tweet over here by Markets and Mayhem. They show 8:15 a.m., which is tomorrow. So they posted this yesterday, so it's counting for today. ECB rate decision, so 75 basis point hike from 50, and then to 125 policy rate hike is expected. 8:45 a.m., you have the ECB press conference. 9:10 a.m., Powell's going to be speaking, and we know every single time that moves the market, oftentimes what you see is that the inverse will happen. So he'll speak, and if it's going to be negative, the market usually pumps into that, and then a couple of hours or days later, everything starts to sell off. So be cognizant of what is spoken of in the speech. I'm sure we will cover that on Rand Show later on today, so make sure that you watch that. And at the end of the day, there is a fair amount of hedging that's going on into these event volatility catalysts, and there's a lot going on, guys. So if you look at the sentiment trader over here, shows as well, sometimes there's a chart that absolutely just blows your hair back. And in 22 years of doing this, none stands out like this particular one. Last week, institutional traders brought $8.1 billion worth of put options, and they bought less than $1 billion in calls. So puts meaning they're betting on downside, calls meaning they're betting on upside. And this is 3 times more extreme than in 2008. So what that basically means is something big is coming. You can see that guys are hedging, and you do want to be on the right side of whatever the next expansive volatility move will be. So breaking market news over here shows that Fed's Brainard says that higher policy rates and balance sheet reduction should aid in bringing demand into line with supply. And with that being said, we are in this for as long as it takes to bring inflation down. That's what they've said. That's what the Fed have said. And that is their primary goal. They don't care about crypto markets. They don't even care about equity markets. Their primary goal is to reduce inflation, and they're going to do whatever it takes. So you have to be prepared. Do not fade what the Fed is doing. Looking at the ratios over here on funding rates and leverage, just touching on this very briefly. On the 4-hour chart, you can see that yesterday there was obviously quite a lot of shorts that piled in, and the move has started to go up now. So there is a chance that they get liquidated, but I'll show you on the low time frame charts what that would look like. This is a new platform that I've started to use. It's quite interesting. You can go back all the way with the history over here, and you can see that in times, major bottoms will essentially be found when you have extremely negative funding rates, and at the moment we haven't seen that yet. So we need to wait for confirmation on that. Nothing out of the ordinary has spiked yet on the funding rates. Neither has that on the volume, which I'll show you shortly. But if you look at Pentoshi, and I agree with what he says here, he says price-based capitulation is nearly complete. But in his opinion, it's got a bit to go. There's 20 to 30%. Most of the downside is complete. Time-based capitulation is the next part, though, that you have to focus on. He's not in any rush to buy, and each buy will have different time horizons, probably 1 to 2 years for the market to recover. And a lot of people don't know this, but markets can capitulate in 2 different ways. They can capitulate both in price and in time. So if we don't see a major capitulation, which is what I'm looking for with high volume, extremely negative funding rates and things like that, then what I would be looking for is an extremely long sideways market. That's your second form of capitulation, is time-based. If you can hold, let's say, where we are between maybe $17,000 and $20,000, and price never breaches that for the next 2 years, but it also doesn't really get further above that, that would be an example of capitulation, because market participants would then get completely bored of the market. It was similar in 2018, 2019, where people were 100x leverage trading just to get a small move out of the market, because the market's moving like 0.1% per day. So that's something that could potentially happen. We'll just have to watch out for that. Important charts over here that I wanted to show. And I have back tested this, something I've used for a long time. It's got what's called the Coates moving averages, and then it's got Fisher distance from the EMA, which essentially is showing you how far price is extended away from the different exponential moving averages. And I like to use this one on a weekly time frame to kind of paint a picture of what's going to happen over the next couple of days to weeks. And if you look at this, you can back test it yourself, but pretty much every time you get the cross over here to the downside, it's followed through with quite an extended downside move following that. And here you have the next one over here. And this one is just crossing down right now again for the third time at least in this year. And I would expect it to follow through. So you can use these to your advantage, these signals over here. Anytime that price pushes into the yellow or blue, so you have the blue that's now crossed down and the yellow, this is going to essentially be a major resistance point, which I would typically build short positions into. So that area over there. And it looks similar on the daily. So if I go into the daily, you can see the daily is also just crossing down. It didn't get as extended as I would have liked. That would be a high confirmation trade. But usually if it's in the +4, -4, then you have a high confirmation trade opportunity over here. But I do expect follow through. And then the question is, does this major support zone hold on the follow through now, or will it turn back up? Will we go sideways through here and then shoot straight back up? At the end of the day, you have to consider that still nothing's changed with the major trend. You have a downtrend, right? You can see the major downtrend over here, and I'm going to show you on another chart that I have, something that most market participants, I believe, have been missing and they haven't seen lately. I think it's on this chart. Yes, it is. So first, I want to touch on, before I put on the next thing that no one's looked at yet, a double bottom. Is this a double bottom? Well, you have to consider what is involved in a double bottom. So if you pull this up over here, it essentially says that a double bottom will look like a letter W. So could that happen? Could that be valid? Well, possibly. I mean, it would need to be something like this. It would be a bit of a slanted one, but nevertheless, it would be a W pattern. The twice touch low is considered a support level. Is that the case? Yes, I would say that is the case. This could be a double or triple bottom. The advance of the first bottom should be a drop of 10 to 20%. And then the second bottom should form within 3 to 4% of the previous low. So let's take an actual look at that. So we have the first advance, much bigger. Maybe crypto moves more, right? 40%, big move. But if you look at the next bottom in relation to that one, is it within 3 to 4% like they say? 6%. Again, crypto moves a bit more. So it does fit some of the picture over here. And then, okay, I think that's enough. You also need high volume within this move. So let's see. Do we have high volume? See, no volume. More volume on that sell-off than on this one. So I'm not too sold on this yet. And the other important thing that you have to consider is this. If you switch this to a line chart, because usually you want to look at these things from a closing basis, that, as you can see in relation to the previous bottom close, is lower. So now yet we have another lower low on the 3-day chart. And as a trend trader, you want to follow the trend. Lower lows, lower highs. That is a literal lower low. There is no disputing it. You have a lower low. Now you'll be on lower high watch. So, excuse me. There's a possibility that we're going to be in a range though. And that would be your best case scenario as a bull. If you are in a range, this is what your range looks like, okay? So if you look on the right-hand side, when I click on the arrows, it will show you in the blue there if you do want to screenshot or zoom in. But the range low would be this at 18,915. Range high would be 24,476, with your mid-range coming in at $21,695. So if that is the case, then of course, you would be looking to long with a stop loss underneath there towards the mid-range, TP1, towards the top over there would be your final TP at the range high. But with that being said, this is what a lot of people have missed. And I just want to zoom out to give you some perspective over here. So let's grab this parallel channel. A lot of people are missing that Bitcoin is quite literally in a very strong downtrend within this parallel channel. that has been set literally since the highs, and it's been following it really, really nicely. So you can use this to advantage for both the up and the downside. The upside would mean that even if Bitcoin price had to rally right now straight towards the range high, that would be a high confirmation sell opportunity for me right over there, because you have a double resistance. You have the top of the range high and you have the top of the parallel channel that's coming down, and you would expect something like this. That would be a huge trap leading to probably lows in Q4. I'm still leaning towards possible new lows within this month of September. And the reason being is because, of course, you also have the big institutions and the big players who will be rebalancing their portfolios leading into the end of the quarter and then going into for the end of the year. And that rebalancing often involves selling. So with that being said, what about the downside? If this had to sell off right now, and you mark off that level, which is the middle of that parallel channel, have a look at that. That comes in at exactly $13,640, which sounds familiar, right? Very, very similar to our lower weekly Bollinger Band, which is also in line with our key level. So some important things to consider over there. That is, of course, on the 3-day chart that I'm looking at. So with that being said, I also just wanted to touch base on the sponsors. We are going to be running a major competition for Bitget and ByBit. Previously, the guys in the US were saying, well, they're unable to participate because otherwise they need a VPN and everything, and it's illegal to trade on ByBit. So what you can do is you can use the link below for Bitget. That will give you access to the next competition. They're 2 independent ones. I really encourage you to join in these. It's only $250 or something entry, and you'll find that it seriously sharpens your skills. I wasn't trading as actively myself, and because of the competition, I found myself, looking at the market in a much more precise manner. And I think you'll find the same benefits if you do that too. So moving on to this chart over here is the daily, and this has been our main one. I would say I make quite a lot of decisions off of this chart because with the market the way that it is, I just feel that there's a lot of chop on the low time frames, but the daily has been a lot more clean to use within trading. And what you'll find over here is that, of course, we are coming straight back into what was previous support. I expect this now to act as resistance in a similar way to what I showed you on that Fisher chart, that with the quotes moving averages. I would expect this 9 EMA to act as a resistance at 19,600. So in a nutshell, any push above that is shorting opportunity for me. I'm definitely not looking to go long. I do give the validity of a possible bullish move over here in a range trade, but I'm not playing it that way. I think the momentum is quite strong, and there's a lot of economic data that's going to be coming out and a lot of catalysts that could move the market. So I'm preferring to not fade the bearish momentum that's been built. I would expect some sort of follow through, and in order to do that, in order to play these shorts, I have used this strategy over here, which I showed you yesterday. This is on Bitget. If you use the grid trading strategy, it is on, you have to use the leverage one though. So if you go to strategic trading, futures grid trading, I entered into this position. I used half the equity in case it goes a little bit higher. What it does is it uses 36 grids, and it essentially scales you in as price bounces and moves up, and then it will start to sell you off as it comes back down, and it does everything automatically. So I usually don't do these automatic trading things because I found that different bots and algos don't typically work. But I thought I'll give this one a chance. I used it on only 2x leverage. So I've completely reduced as much risk as I possibly can. And if you do want to join in on this, again, use the link in the description below. It is there, and all you need to do is fund it. Go to strategic grid trading. So with that being said, let's touch on this chart over here now. Low time frame, what's going on? So I see price is already starting to come back down over here. We'll need to see if it forms another higher low. But at the end of the day, this breakdown of the descending triangle, I'm anticipating is going to act as a resistance right into this zone over here. I would expect any push into, again, 19,600. So a lot of confluence all the other moving averages and EMAs that I've shown you, that 19,600 would be a good area to start laddering into a short position if you do decide you want to short the market. So that's it for Bitcoin over there. Now I wanted to touch very quickly on Luna. So I said, did you guys hear that Luna Classic is going to $1? All it needs to do is break through the range high over there, and then you can long this all the way. This was a completely sarcastic tweet, just in case you're confused. But I just want to give you some perspective on what this would need to look like if it were to go to $1. Don't fall into the trap of these memes. I must be honest, I fell into the link to $1,000 end of year meme trap myself. And this is essentially what you would need it to look like. So have a look at this video. So here you have range high, range low, mid range. And now you start to zoom out. What would this need to look like to get to $1? Because I know Luna Classic is pumping. I'll take a look at the chart in just a second's time after this video. There's your range. It's already gone. Just to give you some perspective, guys. 10,000 light years away. Moving through space. And eventually you get to your $1 target over there. So do not bet on this, guys. I mean, to trade it is fine. Using high leverage is still risky. We can have a look at the chart over here. Let me try to find Luna Classic. I think I had it on the bottom somewhere here. Okay, so here's the actual chart that I had before. And you can see, look, it has broken out of that range over there. So if you are wanting to trade this, again, cool, don't expect $1, but this is kind of how you want to play it. I think the chart that I did previously, I didn't think would line up as perfectly as this, but any pullback into the top of the range high, which is coming in at 0.0, how many zeros is that? There's 1, 2, 3. So 0.00045013. So 0 point and then 3 zeros, 45013. That would be your probable area to buy into. If you put the chart on, you want to essentially make sure that price holds above that zone over there. If it loses that, then I would cut the position immediately, the long, and I would try and re-enter somewhere around here with my stop underneath those lows. If it loses that, basically it's over. Then the whole picture is changing over there. So with that being said, I want to touch very briefly on a lower time frame chart over here for Bitcoin. So you can see you have the general range, as I mentioned. You have what would be a massive range on a daily. I did point that out already on that 3-day chart. It's going to be the same thing. So lower time frame, what to look at. Going onto a 1-hour chart, this is essentially what I'd be seeing. So anytime, notice the differences here, and I want to make a couple of adjustments to this chart live. So what we had over here was exactly the same thing. You had a range high, range low over there. That was support, which then we broke down and it flipped into resistance. Then we formed a new range over there. So I can delete this. This was our previous range. And you just keep doing this. Same thing. Now, what was support for that range is now going to flip into resistance. That now became support for this range, which now also flips into resistance. And you can literally just move it there like that. This is still a support level which comes from further back in history over there, but I don't anticipate it to be too strong because it has been hit and tested multiple times. So like somebody walking on thin ice, the more and more that you knock onto that same spot creates a little hairline fractures, and eventually you're going to break through that zone. So essentially, this is what I'd be looking at. This is your primary range at the moment, and you can take your fib retracement tool over there. So taking from the top to the bottom, and then you can mark out the mid-range. Let's grab that. So mid-range is at 19,000. There you go. So this is mid-range. Okay, this is the way that I would treat this at the moment. I would expect we're probably going to range for a little bit. And then eventually, so that's why any sort of push into this area, again, I've mentioned that number multiple times, 19,600, right? So any push into this resistance zone is where I would want to start grabbing short positions. So if price comes up like this, I'm grabbing shorts every time over there, and I'll scale in, grabbing shorts, because I expect that this will range in the same way that all of those did, and then eventually lead to a follow through and a breakdown. Notice how the market is moving in almost like an inorganic way. It's very programmed and systematic. Like, I don't know if it's algorithms that are trading the market. This is what you find in things like Forex. It trades like very clean and systematically. And this is the same thing that's happening right now. So you have essentially what you would be looking at this like is you have deviation over there, back into range, deviation over there, back into range. This is mid-range now, deviation over there. I would target back down to the bottom of the range now, deviation, send it back up, see if it can hold above mid-range, get to the top over here, close the long, flip short, and I would just play it level to level like that. These are the main levels that you want to focus on. I'm going to mark them out for you because maybe at home you can't see exactly what they are. This is your range high, 19,800. I'll put a price label in. Let's grab another one. Mid-range over here, 19,298. And then your range low over here is at, there you go, 18,782. I'll zoom in. You can look at that properly. Let's make this nice and thick so you can see it. There you go. Boom. So this is essentially the picture. This is what I would expect over the course of today. If this happens, if you see price go like this, we're coming back down now. If you see price come like this and it starts to come underneath this box and starts to hold there for maybe 2 to 3 hours, then there's a possibility that you should enter into a short position already over here with your stop just above. And it would, once you breach that level, next target becomes down here at $18,028. So guys, I think that brings us to the end. Is there anything else? Let's have a look over here. Yes, just make sure that you use the links below. You can get access to the daily candle newsletter over there. It is in the link below. And Sheldon and I drop charts there every single day. Also, feel free to use any one of these exchange links. Most of the guys are signing up to Bitget because I know you're in the US, most of our viewers. So feel free to support me by using the link below. You do get a sign-up bonus. You can get up to $8,000 in sign-up bonus, and trading discounts are included with that. So guys, that brings us to the end. I will see you guys all on the next video. Let me know as well in the comments below, please. Do you enjoy this time? I know most of you are live now, probably in Europe. So thank you for your support. And then if you're in the US, let me know if this works for you as well when you do wake up. Then good morning to you. And I will see you all on the next video. Cheers for now. Have a great day.